we have to go over Bitcoin here. Right now we're at 76.7K. So we went down a little over 5% in the last 7 days. It's 5.8%. But we're going to talk about where Bitcoin's going now. I kind of got into this on the live stream. But for the people that missed the live stream and don't feel like watching the whole thing on playback, I'm just going to go over it again. So remember, I'm not a financial advisor. None of this is financial advice. Let's get straight to it. So as we're looking at the price right now, we're at 76.7K on Bitcoin. We just now got rejected at the 200-day moving average. And now we're pulling back to this white line, which is the 50-day moving average. So the white line here is the 200-day moving average at the top that we got rejected at. And then the red line that we're about to pull back down to on support is the 50-day moving average. So now we're about to hit that. And we actually have a support line set at 75K right there at the support there. And you can see we've hit that support right here. We've hit the resistance right there. We used it as resistance. And then back in April of 2025, we used it as resistance again, and kind of resistance in March of 2024. We didn't quite reach it, but we almost got there. So 75K is a significant zone for Bitcoin. So I assume that we're going to have some support there and that we're going to bounce. And we're already starting to kind of do that. So I feel like we're going to have a bounce there. And then we're going to try to test these highs again. And we're going to try to retest that 200-day moving average. So that's going to be a very important thing for us coming up soon. And as we do bounce, if we do bounce back up here to 79K, that moving average is going to be right here at that resistance area, the Fibonacci resistance. So we'll be able to see what happens from there. But remember, we're still trading within a bear flag, which is a bearish sign, obviously. So you still have to be careful there. Now, the next thing is the percent R trend exhaustion. You see that we've actually became overbought here on the percent R trend exhaustion on the white line, which is the short-term trend, and then the blue line, which is the long-term trend. And now we're seeing that both trends are actively pulling back, but you're actually noticing that the blue line, which is the long-term trend, is actually trying to curve back upwards, which does make sense because as we hit the support here and this 50-day moving average, we should have, or we might have a bounce back up. So there's a possibility, like I mentioned there before, and that just kind of backs up that claim and almost supports it in a way. And then the next thing that we can talk about is this right here. This is the MACD. This is actually creating bearish divergence. And what is bearish divergence? Bearish divergence is classified by lower highs on the MACD while simultaneously getting higher highs on the chart. That's bearish divergence. And you can see here on the MACD, we have boom, one high, boom, second high, lower high, boom, third high is the next lower high. So we've completed the bearish divergence. And now what comes next is a sell-off. And it's usually a big sell-off that ends up to start creating bullish divergence. And bullish divergence is classified by higher lows on the MACD while simultaneously getting lower lows on the chart. And that brings us to the next thing. If you pull up the weekly chart, you can actually see we're creating the opposite, which is the bullish divergence. We, on the weekly chart, are creating long-term bullish divergence, which shows higher lows on the MACD. And then this right here is going to start printing out some lows right here. It's going to start selling off. And then we're going to have another higher low here. And then we're going to have some buying pressure coming up in here. And then we're going to have another higher low, which will be the final one, right? And then that is going to take off towards the end of the year here. And like I said, it's going to be somewhere inside of October. We might not have this third higher low that I was talking about. We might just have this second one here. And like I said, around October should be when we start to take off towards the end of the year. But we're going to be creating lower lows in the meantime because look, higher lows on the MACD, followed by what? Followed by lower lows on the chart. So when you go ahead and you pull up the chart for the weekly chart, you can see that yes, we've started creating these lower lows here on the chart. Boom, one there, boom, one there. But what happens next? Another lower low because we're doing what? Bearish divergence, which means 50K is that support. And the reason why I talk about that 50K support is because when you look at this and you break it down holistically, you can see that we actually have a good support here, very, very, very strong support at 50K on our Fibonacci, as well as seeing that 50K support here back in 2024, August of 2024. So we hit it there and we were actually inside of a bull flag inside of this range. And that was very significant support that brought us up to our next rally inside of Bitcoin, which continued the bull run. So 50K is very significant. Also, 50K was the level that we got rejected at that confirmed our bear market back in 2022, which was at the 200-day moving average. So we got rejected at 50K, well, right before 50K at 48K. right at that 200-day moving average, and then it continued downwards and continued to sell off from there. So it's a very, very, very significant level, which is why 50K is going to be that next lower low. And then we got to see if we're going to go below that or create another lower low. But right now I got it at 50K. I personally think that the bear market could be anywhere from 28K, and I know 28K is super low, but I highly doubt it's going to get that low because the institutional investors just aren't going to let that happen. But 28K to 50K, and I know it's a very, very broad range, but the biggest takeaway is 50K because 50K is that support down there. It's a solid support. So if I'm being completely realistic, anywhere from 40K to 50K. But I like to be a little bit on the bearish side. So I'm saying 28K to 50K. And I did some math that kind of added up to 28K. So that's kind of what I'm alluding to there. But anyways, 50K is still the area that we're looking for our next lower low for our bullish divergence. So in order to be bullish with the bullish divergence, we have to have that pullback here. We have to have that next lower low. And that's exactly what we're in the process of creating. We're seeing selling pressure is now coming in on the MACD. And we're also seeing that this blue line here on the MACD looks like it's about to start curving downwards, which could start the next selling wave. And then also when you pull up the percent R trend exhaustion, you can notice that we're also curving here. We've already intersected. We're curving here almost like we're about to curve down and have another sell-off on the percent R trend exhaustion for the weekly chart, which is a long-term chart. So all in all, when you look at Bitcoin, it's bearish right now, right? So we had a nice bull trap. So, trap the bulls a little bit. And then we trap the bears a little bit as well on the way up. So, they're just going to keep trapping people left and right. All right. And now I do want to mention this before we close out the video. This is something that someone just posted on Twitter. It says Bitcoin just entered the most dangerous phase of the cycle. Everyone thinks it's just another small correction before a new bull run. And that's exactly how retail is getting trapped. The real pain starts when everyone feels safe. The bull trap to 82K is over, and now Bitcoin will test new lows. I called the we don't gotta talk about that. He's just patting himself on the back for the last 3 sentences. But yeah, I do believe that that a lot of people got bull trapped. I was about to say but I didn't get bull trapped. Everybody else got bull trapped. I didn't get bull trapped. I'm watching this and I know exactly what's about to happen, or at least I think I know. So, I'm gonna stay away from that. But yeah, he had a good point here, Chiefy on X. He had a really good point right there. So I just figured I would mention that. But yeah, this is pretty much all I got for you guys today. I just wanted to make this video quick and simple, no BS, no fluff. Just wanted to put this video out there because I did the live stream and mentioned it, but I know a lot of people might have missed the live stream and don't want to watch the full playback because it's like almost an hour long. So why not make an 8-minute video? All right. So this is all I got. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section. Let me know what you guys think about this. And let me know what you guys want me to go over next. Go ahead and become a member of the channel. And you can have me go over any stock or crypto as long as it's not a low cap scam coin. All you got to do is become a member of the channel. Only $10 a month. And then leave a comment on any one of my videos saying, hey, can you go over this, go over that? Just become a member and you can do that. And check out the link in the description for Advantisify. Get some discounts on your trading fees for your perps trading. So anyway, shout out to you guys. Again, as always, I'll be back with another video.